What is going on YouTube? It's Brendan from Market Makers. Welcome to the show, everybody. Happy Monday. The stock market is closed for the day. Futures will be trading, but let's talk about Bitcoin. Guys, I showed you my short potential setups yesterday. I entered a short overnight, I guess like 3 a.m. my time, 2 a.m. I don't remember. We're going to go over that in this video to help you polish your skills. I want to show you what I'm looking at as well. And guys, if you want to support this channel, please check out our platforms that we trade on. BITGET, where we trade all the cryptos and altcoins, top 5 exchange by volume, fantastic place to trade. And SimpleFX, where we trade the equities and commodities and everything else. Available exclusively with our link, a double bonus. You get a double instant bonus with our SimpleFX link. The tutorial to SimpleFX also in the video description. Helps out our channel immensely, as well as always liking and subscribing. Really would appreciate it, guys. Let's go ahead and look at this on the weekly. So a lot of Bitcoin guys, I saw some videos, they pop up on my phone all day long. Some big permabull names were really bullish about the price action. They actually took out longs. As you guys know from watching this channel, what I'm looking at here is Bitcoin hitting the 200, 233 on the weekly. I think there's a realistic chance we're going to stay below the 200, 233 based on this price action. You have 1, 2, 3, 4, 5 candles now close below it. You're working on your 6th candle if you cannot close above it, okay? So 6 weeks you're going to have of candle closes below the 200, 233, just like the Russell. And what you could end up having happen here on our wave pattern that we talk about, what you could end up having happen here is Bitcoin basically capitulating at some point to these deeper levels, whether it's 15K, 12K, you hear a lot of people talking about 10K, my pattern ends itself at 10,591, or that 8K number that we've gone over as well, or the pandemic low of 3,800. All of those are possibilities, and that would make me move my A wave over here for the ABC correction, and then you would have to take a new fib wave projection, guys, which is why I haven't done it yet, because we don't know if this 17,577, whatever this is the bottom for that next wave up, okay? This is a forecasting pattern, but this would give us a wave projection we could measure when we find our true bottom. But based on this price action of the struggles we're having below the 200, 233, just like the Russell, we may be here while the equities, while the Nasdaq and S&P do that further decline to their weekly 200, 233 for that big bear market bounce, okay? And if they don't hold that, we'll go over the equities charts. But if they don't hold that and they retrace deeper, I would expect Bitcoin to also retrace deeper before it gets that nice bounce back up, and we can give a fib wave projection on that. So just be aware that is a possibility. On the daily time frame, guys, like I said, lots of big YouTubers were very, very excited about the price action, bragging about their longs. And if you don't think Bitcoin tracks to the equities, it did 100% today. The equities whipsawed. They opened up very bullish. They whipsawed today, recoiled back down. Bitcoin did the exact same. And look at this impact on your one fib. 22,779, and this got to 22,777 within $1.46. If you use this sense as well, within $1.46 on almost a $23,000 asset. This is how accurate fib wave projections can be. So we hit that, we recoiled. As you guys know, trading in Wyckoff, watching this channel, you got to hold a cup, right? Whether it's over here, up higher outside the range, you got to hold a cup and go up. The problem on the daily is very thick, strong resistance. This doesn't really start getting weaker until August, okay? Very thick, strong resistance here. So you're going to have limited price movement up, in my opinion, probability-wise. Let's go ahead and bounce forward. Now, looking at this on the 8-hour time frame, again, you can see the fib that we hit. And guys, you know, if you watched my videos last week, what did we talk about? I said July 16th, July 17th, Kumo twist, right? I think I'm batting 1,000 on this. So July 16th, you knife through it, you wick above it. July 17th, you're above the cloud. You do your cup rollover. You see that? Your cup, and then here's your explosion up. And then you, of course, you whipsawed today, okay? So we got through that Kumo twist. Again, thin area, but you have to look at your support here. Extremely thin, right? Extremely thin support and resistance. Fattens up a little bit here towards the end of July. We'll see what happens here. But what I anticipate happening, I want to show you this on the 4-hour time frame because Bitcoin had this recoil here. What I anticipate happening, here's our pitchfork and everything, guys. Let me go over this and then I'll tell you what I anticipate happening. Bad segue. But we talked about this yesterday. I said, you know, I like to trade at extremes, right? This is one extreme, it's the one fib. And then we had the moving, our long-term moving average is a 200, to 233, and then that volume weight at 233. And as you can see, we pumped above it. We have the 618 in the pitchfork. I put a short in the room, guys, from entering at 22.3 to 22.7. We got to 22.777 within $77. Stuck our stop loss up at 23K. And of course, we got this nice dissension, which peak to trough was about 6%. Let me go ahead and measure that. Is about, just over 6% peak to trough. Now, what I think Bitcoin will end up trying to do here, and again, this is earnings season for equities, so if the earnings are bad tomorrow, you could see more red, but if the earnings are good, you could see Bitcoin try to retrace. This is how you get this famous market pattern, guys, of double tops. Try to retrace, hit a retracement level, or come back up to that 233, or if it's really bullish, come back up to where it fell from, right? But if it fails at any one of these, you're making a double top. Something you see the indexes and Bitcoin do all the time in these trading ranges is get double tops, okay? So you could see this happen. That's if you get enough price momentum, or else you could just have this, which is this dissension. You just start getting some red candles if the equities are opening up really bearish. But I just want to, I want you guys to understand, trading in an equities bear market, Bitcoin has never done this before. It's very important to understand that, because all of these models, guys, all of the models, whether it's the Plan B stock to flow, whether it's fractal patterns you see people pull out from 2013, whether it's making comments like Bitcoin has never lost a previous all-time high from the previous cycle, so it won't lose it again, and then it loses it. It's doing things it's never done before, because Bitcoin's whole existence is in an equities bull market, and you're not in an equities bull market. That was the longest equities bull market in stock market history, and it's over, and it's going down further. It's going to make Bitcoin do things it never normally has done in the past. Just be very well aware of that. And guys, the cheat sheet here, look, I've traded the last two bubbles. This is one of the advantages you get of being older, okay? Watch your 4-hour 200-233. I cannot stress this enough. You guys know I've done this. I've pulled this chart down many times, looking at all these areas you could have had good trades. And in these areas, it doesn't always wick perfectly like this. This is when you use your confluence. This is when you use your volume divergence on the daily. This is when you can put your volume profile on here. You can look at your other moving averages. You can look at your RSI, your MFI, your money flow index. Use the indicators you like to use. Find these areas, but they line up so beautifully with the 200, 233, and you get massive trades, guys. When these hit, you get massive trades in these marketplaces. This is something everybody needs to learn. It's something I struggled with when I was younger. Being patient, waiting for these big trade setups. Okay, this is what I do. I wait for these big trade setups or high probability trades that have the ability to give you a very nice return. I mean, look at this. This is, I'm going to try to pull this down and measure this real quick. This one random spot here where we hit the 200, 233, 37% move, guys. 37% move, and you're never in danger at any juncture shorting here of getting your stop loss hit the whole way down. That's an ideal situation. Okay, it's an ideal situation in a declining market. But if you just track this, you could pull this all the way back to between the previous all-time high and a current all-time high. You can see where the 4-hour got hit. I've done that on other videos. You can see where it got hit and the trades that you would have got from a 12,000 point drop. Very important to understand and acknowledge the macro environment you are trading in. And when you see all the things like the pi cycle stuff making its rounds, understand all of that was based on Bitcoin trading in an equities bull market. Okay, so I don't put any value at all, and again, it's just my opinion, but I don't put any value at all in models that are built when equities had a bull market on Bitcoin. Bitcoin's never traded in this environment, which is why you keep seeing these important hallmarks for Bitcoin, like never breaking the previous all-time high, get broken. Okay, these things are going to break because you're trading in a bubble, and as the bubble deflates, as the value comes down, as the Fed raises interest rates, all of this will affect the price of Bitcoin. And most of the people you watch, because I get the pop-ups on my phone, they don't understand that, okay? They want to talk about Bitcoin 300K next year, 200K this year, going on these massive runs, the altcoins with these crazy numbers, because you get clicks, guys. And if you're in the business to get clicks, that's important to do. But if you're in the business to day trade, to make money, to find your financial freedom, you watch channels like this that get it, okay? Now, let's go ahead and look at a couple more things really quickly, and then let's bounce over to equities, because I want to talk about the equities. Let me just see what else is on here that we want to look at. We haven't looked at the volatility in a while. Let's look at our Caterpillar, if it's on here. Nope, it is not on here. Let me throw this on here. RSVVB. Donovan Wall, another excellent programmer. You guys should check his stuff out as well. I use a lot of his indicators. So this is a Caterpillar. It squeezes like Bollinger Bands. It's a reverse engineered RSI. Explodes when you have movements. And you had your explosion up here, okay? So you had your explosion up. We have our money flow indicator. As you can see, we got above the EMA cloud, falling back down. 4 hour, we had some good volume. We'll see if we can rise back up. It will be interesting to watch to see if we do get our rise. And of course, this is when the screen blacks out. So, all right, let's check out. By the way, energy, guys, just want to cover this extremely quickly, but energy, very bullish today, okay? Had nice big moves up. Natural gas flying up, oil flying up. This is the oil chart. Oil flying up, natural gas flying up. So once again, we're putting ourselves, we thought we had a reprieve for inflation because remember, a big chunk of that CPI is energy and it's just flying right back up again, okay? So let's go ahead and get rid of this. Let's look at the equities. Equities, guys, S&P 500. Looking at the S&P, remember the two options here for our big bear market rally. All the analysts today on TV were super bullish. Some of the big, two of the bigger firms said that this rally could take us to 4,200. Yeah, I think it's not there yet, guys. It has to come down, in my opinion, to that 200, 233, and then rally up. And if you lose that, you're going down to that 3,000 number on the S&P at the 45 angle. And this is right at that 3,500 number, okay? These are the two numbers I'm looking at. Now, something I want to draw your attention to on the S&P here on the daily. This blue line is the 50-day moving average. You guys know from watching this channel, I've talked about these trends that you've had in the market. A lot of these trends for, worst quarter for this, worst quarter since 1928 for the Dow, these types of things. Well, we just had another one today. This candle today, closing below the 50-day moving average on the S&P, is now 60 days below the 50-day moving average. The last time the S&P did that, drum roll, was 2008. See, there's no such thing as coincidences. There's patterns. And when all of your patterns that the S&P, the Dow, the Nasdaq keep making go back to the biggest crashes that we've ever had in the bubbles, that should be a leading indicator for you to pay attention to what's happening in the marketplace. It's not for the people on TV. They don't get it, okay? They don't see any of that. This is not 2008. This is not .com. That's all they can keep saying, like a broken record. Yet none of them predicted .com or 2008, right? And the people that did are saying it is a massive bubble, worse than we had in the previous two bubbles, but they don't get any airtime. Very interesting how that works. So the S&P, just like everything else, pumped up, whipsawed back down, and finished negative. Let's look at the Nasdaq. We're going to see if we can get more momentum. Again, this is very earnings driven, okay? Earnings are coming out over the next couple of weeks. So you're going to have earnings days that are good, earnings days that are bad, and we're going to have volatility in the range. Again, the volatility today is twice what it was a year ago. But just like Bitcoin, guys, just like the crypto, the 4-hour time frame is really all you need to watch to trade. Your 200, 233. Pumped above the white line, the 200, got caught up on the red line, the 233, right at the 1 fib at 39.02. And then look what you did. You rolled over and fell down. You found support at your 618 at 38.33, wick below it, pump back up above it. So just like Bitcoin, I want to see if this gets some momentum to come back up and possibly make us yet another double top. And if it does this on the Nasdaq and the Russell, we'll be trading that, okay? Because this happens over and over. We are in an accumulation sideways market. You're failing at the top of your range. You're hitting your long-term moving averages, and then you dump. And of course, the Nasdaq, same thing, guys. 200, 233 are below you, about a 6 to 7% move down still. Good potential for a rally, or that 45 angle below that, okay? So your 200, 233 is at 10,911. Your 45 angle, depending where you hit it, it's roughly the low 10,000s, 10,300. Looking at Nasdaq on the daily, you did pump above your 50, the red line here. You pumped above your 50, whipsawed back down below it. Okay, look at the patterns, the exact same pattern set up as it is on the S&P, right? It's the same money in all the markets, guys. 4-hour time frame, the Nasdaq loves to do this. You see it over and over again. Split the moving averages, get above the 200, fall back below, and then break down, okay? Got above the 200 and the 233, fell back below, split the moving averages, pumped up again, and then fell back down. This could be the first part of that top, just like before. Come back, hit one of the retracement levels in our pitchfork, and then come back down again, and then have basically the same exact type setup. Now, one of these setups could be a capitulation event when you actually do start breaking down and sweeping your lows, okay? So that would be great to be in a trade when that happens. We'll see if the Nasdaq, we'll see if the markets are green tomorrow and they do roll up. You can see the money flow printing the double top already. You see that? So very interesting to watch, and you can see it in your indicators. So we'll see what happens here, guys. The Russell, just like Bitcoin, below the 200 and 233. This is a 377. You can see how tight that range is. And of course, the Russell wicking up to hit the 200, 233, getting rejected, falling back down, just like Bitcoin, guys. And again, this, the Russell may never break this. It may not break the 200, 233. The Russell will decline, as will Bitcoin, while the S&P and the Nasdaq do decline when they finally capitulate to a new bottom, to a new low. And wherever the Russell comes down to, it could then start to rally up, just like Bitcoin, okay? And then we'll get some wave projections of where it can go. But this is basically your market top. When you see Bitcoin or the Russell pumping to the 200, 233 on the weekly, look for confluence and be very well aware that's currently your market top, and it could be a tradable event. Daily time frame, here's your 50 on the Russell, the red line, contacted it, also contacted the fib, obviously, the 618. Great confluence, reject it, sold back off, guys. So we'll see if this pumps up tomorrow. Again, below that 50 on the daily. The 50 on the daily is essentially akin to that 200, 233 on the 4-hour, right? So let's look at this on the 4-hour. On the 4-hour time frame, you have your 200, 233. Get rid of that dot. And let me zoom this in a little bit. Got a lot of stuff going on this chart. Let's get rid of this. There we go. You can see we pumped up. We got the 200 right here, the white line, 233. Couldn't get above it. Got one wick up, hit the 618. Remember, the Russell likes to do that flick. It does this over and over again. It's funny how, this is how you have no social life and you trade too much, when you start giving the indexes personalities. But look at this. It did it here. There's your flick, right? Here's your candles. Just flicks up, hits the 200, 233. Here does the same thing. Get your candle clusters, flicks up, hits the 618, and it did a flick over here as well to hit your 200, 233 before the decline. So let's see. You got a selling climax candle right here. If the Russell tries to rebound, get some volatility, come back up. If you get bullish momentum, you might get to the median line, maybe back above it, and then do that second part. So you can just do what the Russell likes to do, what the Nasdaq likes to do, the S&P and Bitcoin like to do, which is make double tops and break down. We shall see. All right, guys, one more. Let's do Stocks 50 really quickly. Stocks 50, I was really disappointed. I wanted to get in on some of this Ray Dalio price action. I was looking at the 200, 233 right here. We pumped up, however, to the 1 fib at 35.25. I believe July 21st, the European Central Bank is raising interest rates for the first time in 11 years. You guys have negative interest rates, negative, and they're only raising a quarter point. Absolutely crazy. So it's projected that the Eurozone is going to go from 8.1% inflation to 8.6. However, the UK and US are both at 9.1. You could see a 9 handle on that. So absolutely crazy. You're only going 0.25. But I was really looking to see this price action come up here. Again, Ray Dalio with 10 billion in shorts on European stocks, all of them in the Stocks 50. Okay. And then you got some price decline. This tracks really closely, as Ricardo in our room noted, to the S&P. And then looking at this on the 8-hour, you can see your 8-hour moving averages also moving down further. Okay, and there's your line, the 35.21. And you are flirting with that 618 neckline. If you break that here in Wyckoff, you would be coming further down most likely. So I want to see a pump up to tag these moving averages. Give me a pump to short. All right, guys, hope you enjoyed this video. Really do appreciate your support. Please like, please subscribe. Another video coming tomorrow, guys. Take care, everybody. Have a good evening.